All right, chat. Today we have the FOMC Minutes report going live pretty soon. We will see if the Fed is going to take a more hawkish or dovish stance moving forward. As we get started, let me know how the sound is. Let me get some music on real quick. This report's supposed to drop right at 2 p.m. Eastern Standard Time. Just let me know how the stream's running. And yeah. We got our headphones live. Let me see. Let's get this text going here. All right. So we got this report. Let me know how the sound is. Check it real quick. What's up, Carlos? Pawn, Fox, Heavy, H, Lawrence. Yeah, so today is the minutes report, which breaks down the last Fed meeting. Let's get the filters going, see if I could fix myself up a little bit more. I think that's probably good. Maybe make it brighter, make myself a little bit brighter here. And then I could probably kind of edit this down some, brighten it, fix it there. That's probably good. I'm kind of see-through right now. I can kind of see it. Let me make that not see-through. Let me lower that some. Spread this out a little bit. There we go. That's pretty good right there, huh? All right. So yeah, looking at Nvidia, looking at Bitcoin. Bitcoin hit 94,500. If we look at like the SPY itself here, SPY's pretty green, right around $600 a share today. We can put the Nasdaq up too. We'll get the Nasdaq up a little bit closer. Make sure I monetize this thing. We should have. Yeah. All right, we're good there. Yeah, so the FOMC Minutes report is a detailed file breaking down why they essentially did what they did in the last Fed meeting, right? So it's kind of breaking down what they did prior in the last Fed meeting. It'll give us some insight into like what they might potentially do in December. You know, we do have the December Fed meeting coming out mid-December. And so we do have that going live. And so this Fed Minutes report is going to kind of break that down so you can kind of see why they did what they did in the last meeting is what this is going to be looking at. So sound should be good, right? We got good sound, good quality, huh? All right. Yeah, Apple slightly green on the day still. Remember, so the last meeting they cut rates 25 basis points. Wasn't really a shock that they did that. Everybody kind of expected it. Nvidia also had a little downward turn today, mostly choppy, like really choppy. But we did break down a little bit after the opening bell. We've been very, very choppy in Nvidia since then. We are green on the day as well. Let me know about the sound. Sound should be pretty good, but let me know. It's almost time we upgraded these monitors. Nvidia's not dying. Nvidia's just, it needs to pull back. It's up so much, man. It just broke lifetime highs a couple days ago. You know, so like Nvidia is pretty flat. Nvidia hasn't really moved since believe it or not, this is a blue shirt that you guys see. I don't know if it's the green screen making this thing a different color, but this is actually a blue shirt. Interesting. I guess it's kind of greenish almost, so it picks it up as green. And like I could probably change it to a blue screen and see if it like takes my whole Turn the lights on in this room too. It'd probably help. There we go. Alright, we're good. Yeah, so 2 p.m. Eastern Standard Time. Looks gray. But yeah, y'all can't actually see it. Like, look, if I turn this off here, and it turns my green screen off, like, look. It's blue. The screen behind me is green, you know. There we go. Alright, guys. Sava. Didn't they drop on bad trial results the other day? Yeah. Ooh, they're down more today, too. Yeah, because Sava looking really weak. There's no way I'm touching it. Bad trial results are just not a good sign. They're not really like dips you want to usually buy based off of everything. Like, bad trial results is not good, and it's not something that most people end up targeting for dip buys. Just because bad trial results is bad trial results, bro. Alright, guys, we got the Fed Minutes report today. I'm excited, man. We'll see if it impacts everything. I'm gonna put the futures up as well. We'll put like the NASDAQ up here too. Here's the NQ. Look how choppy futures are today. Very choppy. Holiday week, you know, it's not a shock to see us kind of chopping back and forth today. Nvidia down. Here's a 10-minute chart, 1-minute chart, 1-minute chart. I'll put a... Here's a daily chart for Nvidia. A lot of people talking about how it's at the end of the world. Nvidia, it's funny. It's like Nvidia, I'll put it this way. If you find yourself hating a stock, right, it usually means a couple things. It usually means you're shorting the healthiest companies in the world and you're making like a dumb decision there. No offense. I mean, this might rub you the wrong way, but it's just true. If you're shorting Apple, Amazon, like long-term shorting these companies, it's the dumbest like trading decision you could ever make. You need to stop watching The Big Short and you need to like think about your life. All right. That's number one. Number two is that the longer you hold this, the less likely you are to make money because blue chips generally go up over time. So it's just dumb. Like, don't do it. But like these stocks have so many haters that like this thing could push up like this, right? Like this thing is up so much over the last few years, including 2024. Like this is the 2024 trajectory for Nvidia, right? And when it does this, somebody says it's dying, right? So it's like it literally goes like this, and then this means it's dying. You guys got to think about it. It's not going to go straight up. It's really not. It's not going to go straight up. Just be smart, guys. Like, just be smart. MicroStrategy. Yeah, Bitcoin up a lot. I ended up buying BITO ETF this morning. We made money on it, but we took some profit already, and we Target corrected. I wonder if I should buy more Target. I already took most of the profit off, so it's not the end of the world either way. But I'm thinking about buying more Target. I don't know if I should. You think it's a natural pullback? I mean, I don't know if anything's natural, right? I think this is way too early to say whether it's dying, right? You know how many people? Here's a genuine question. How many people have thought that we were pulling back here, and that it was going to finally give it up here, you know, here? Like, I think if you find yourself, and this is the honest truth, I'm not trying to hate, I'm not trying to talk smack, right? But if you find yourself trying to predict stock market crashes regularly and you're always wrong, if you find yourself betting against the healthiest companies in the world and somehow getting upset when they push up, if you find yourself getting mad that you missed out on big moves on the upside in markets, you're taking the wrong way. Like, shorting, the companies you should be shorting are like mid-cap, like not legacy companies, not the strongest companies in the world, right? Those are not the companies you should be shorting. The companies you should be shorting are like, I'm not telling you to short anything, but like Peloton, Beyond Meat, you know, companies that are obsolete, that people don't use them anymore. Not the hottest, healthiest companies in the world. It's just dumb. It just doesn't make any sense. And the longer you hold short positions in these companies, the less likely you are to make money. If I buy this long, the longer I hold a long position, the more likely I am to make money. And that's a powerful edge. And so if you're trading against that edge, somewhere you've been misled in markets, right? Like somewhere you're trying to be cool, you're trying to watch The Big Short and trying to be the next big market crash predictor. That's just not the way you want to go usually, and that's not the biggest edge, like the highest percentage chance you are to make money either. You just got to be smart, guys. Be smart. FOMC Minutes report. I'll put a timer up. We still need to put a timer up here. Let me put one up here. All right, it drops into 40 minutes early, like 39 and a half minutes. And we'll cover all of it live like we always do. And I'm here to say, like, listen, maybe we do crash, right? But trying to predict that thing is just, it's just not the big edge you want. Like, it's not, most people are going to lose doing it. And the ones that are right about it are just purely like luck, I would say. What do you think about Rivian? I think Rivian's alright, but it's risky. You never freaking know. It's got Amazon backing it. EVs are big and cool, but whether some of these standalone EV brands outside of like Tesla are going to succeed is a big if. Nobody freaking knows, and it's high risk, high reward. If you're right about it, you'll probably make some good money or returns, but it's certainly not a sure thing, in my opinion. So what happens is every 6 weeks, the Fed meets and makes their rate decision on influencing short and long-term interest rates. They directly influence short-term rates, and this is most affected by like home equity lines of credit or, you know, mortgages. Adjustable rate mortgages are directly influenced by the current federal funds rate. You know, really what it is short-term interest rates that banks charge each other to lend money overnight and stuff, but they directly influence like adjustable rate mortgages and loans and general home equity lines of credit. Eventually that trickles into long-term rates, but it's nuanced. But every 6 weeks the Fed controls that. If we're at a period of time in which, you know, the economy is really weak and we need to save it from like potential recession, depression risks, the Federal Reserve will stimulate the economy through lowering interest rates, right? So the Federal Reserve lowers interest rates whenever things are weak, economics-wise, economy-wise. When things are really weak, they lower interest rates. They can also stimulate it in other more desperate measures like quantitative easing, which is a form of money printing in which banks create online bank reserves and then use that to buy up bonds and other stuff, like injecting liquidity into those markets and allowing banks to lower interest rates more to consumers. But, you know, there's always consequences of that. And the consequence of a really big economic stimulus period in monetary policy is inflation, right? So it's one of the reasons after 2020 we kind of did all this economic stimulus, like money printing stimulus checks, lowering the federal funds short-term interest rates. The consequence of that was inflation spiking up to 10%. And if we didn't have any consequence like that, we would just never-endingly stimulate the economy, because why not, right? Might as well make the economy strong. Anyways, so inflation spiked to 10% following the 2020 economic stimulus, and people got unhappy. The real reason most people are like unhappy with the modern economy is because of, you know, all that economic stimulus and the consequential inflation that we got from it, right? And so people are unhappy about that inflation. That's why people are still unhappy to this day. It's not really because the economy's weak. It's more so because inflation spiked because of all that economic stimulus that we had to do to save ourselves from the pandemic, basically. And so you see all these prices rise and all this stuff, and you know, the Federal Reserve then has to play kind of catch up with it. And so what they'll do is they'll kind of push down. It's called a hawkish Fed. They'll push down the economy through rate hikes, right? They'll raise the federal funds rate as opposed to cutting it, and they'll bring interest rates higher to discourage spending, because when people spend less, when people have cheaper access, or when people have less cheap access to loans, like cheap loans, cheap mortgages, they tend to spend less, and it pushes the economy down a little bit and causes inflation to drop. So we paused interest rates for a year after we're raising them aggressively to combat inflation, and then the last meeting we cut rates. Was it the last meeting or the meeting before that? Let me look at the federal funds graph. Yeah, you can kind of see the federal funds graph here. Let me look at the last year. Okay, so we've done 2 rate cuts so far. We did, yeah, sorry. I cover so many of these meetings, I kind of start to forget. But yeah, so we've cut 25 basis points this last meeting, which was last week or the week before. And then the time before that, we cut 50. So we did 50, 25. And now for December, according to the CME Watch Group, we are expecting another 25 basis point cut. Right, so we paused them for a year at these high levels. That's why you see it. You look at mortgages right now, and mortgages are more indirectly influenced by rate decisions. But if you look at mortgages, they're still 7%, 6%. There is a lag, but we're still expecting a 25 basis point cut. 60% chance of a 25 basis point cut. And what this Fed Minutes report will do was kind of give us some more insight into what they might potentially do next meeting, why they chose to do another 25 basis point cut as opposed to either 50 or another pause. And yeah, that's what this report will tell us here. Hey, bro, I let you borrow my Jinkos and CD back in 7th grade. I can't believe I found you. Can I get those back, bro? Dude, I don't know if I've ever listened to that band in my life, bro. I would say, hey, are you real? But Jinkos, 7th grade. By 7th grade, bro, I wasn't really rocking Jinkos, dude. You know, I wasn't really a Jinko. That was more like elementary school for me, bro. I'm probably older than you realize, you know. By 7th, 8th grade, I was turning more preppy skateboarder, right? So I was like baggy pants, but not Jinko baggy. And it was more like collared shirts and hair gel, I would say, like by 8th grade, 9th grade, you know. Sorry, brother. Wrong, not the same guy. I'm sorry here, man. All right, chat, we still got 30 minutes. I'm here to hit the like button. Hey, hit the like button, guys. We appreciate it. Thanks so much. Make a poll? You're right. Let me do a poll. Does the market react in a bullish or bearish way to the FOMC Minutes report? Let me know how you feel. There you go. Vote on the poll. What do you think about gold short term? I think gold short to long term is up a lot over the last 8, 9, 10 years straight. And so gold can downtrend for years. And I'm not really interested in buying it right now. I mean, you could keep a small percentage of that to like your portfolio for long term. I think long term is fine. So I think it depends on how long you're willing to hold it. Long term's fine, generally. Short term, though, next 1 to 5 years, it might downtrend, is what I think. But I think long term is going to go up because it's freaking gold, you know. So yeah, we'll see what we get. Spy's right around $600. We'll see if it holds. It's right out. It's $599.90s. Market bullish during the holiday. Sometimes we'll get what's called a Santa rally, but it's not always. You never freaking know. Nvidia down slightly today. Honestly, the Nasdaq's very choppy. It's those holiday months, man. We did bullish or bearish. Market up, down. 62% are bullish, 37% are bearish on the poll so far. So we've already done that. We'll do a Twitter poll here. Alright, so we got our poll live. We did one on X as well. Give me a follow at Beginner Trades. You can also give me a follow on Twitter. I appreciate it. I feel like I need to drink some water, dude. I can feel it. I don't think I've drank enough water today for sure. And I'm over here sipping coffee again. I need to go get some water. Just gold might react to it. Please don't dump. Stomach is turning. Crypto's coming all the way back down. Yeah, give me a follow on Twitter. There's my Twitter handle. Still got 30 minutes left. Should I have the background on this? Or what do you guys think? Gradient opacity. Yeah, we'll save it. We'll put some cliff notes. We'll use AI to break it down too. Lower it a little bit. Bro, my wife, dude. I swear, bro. She calls me so much. I love her, but she never stops. Hey, baby. Hey, listen, I'm live streaming, okay? Okay. Alright, I love you, bye. I swear, bro, she calls me so much. I probably, like, the other day I was on Top Step TV, and I was like, hey, I'm going on Top Step TV. Do not come in my office. Do not call me, you know, for an hour. Just an hour. Like, do not call me. Do not come in for just an hour. And, bro, she called me over and over again. I rejected the call, hoping she would be like, oh, yeah, John's streaming right now. She calls me back to back 3 times. I love her. It's not bad spirited, but man. AMC, GameStop both running today. Are they really? Let me see. Let me take a look. GameStop up to 32s today. It really is running, man. That's nice. Cool. Look at GameStop over here, guys. SPY straddles for FOMC. Well, it's not the FOMC meeting. This is just the Fed minutes report. So it's a reaction to the last Fed meeting. You know, it's like a 12-page document. We're gonna break it down live like we always do. But it's not I need some water, dude. I can feel it. I'm gonna go get some water. If I take longer than 30 seconds, y'all can call me dummy for the rest of the day. Alright, guys. I know I took longer than 30 seconds, and that's alright. Alright. Get my headphones on. thank you so much for the donation. Tech says, so with Nvidia both last and this year, the stock's biggest moves happen in Q1 and Q2, and then slumps in Q3 and Q4, so you can either nibble shares with risk management or refrain from options till next year. Maybe. I think that makes sense. You know, I do think sometimes we get a Santa rally. So I think sometimes we get a Santa rally, and I think that's something that you just want to be wary of. But I appreciate the $10. I think sometimes what happens is we get slumps leading into the holiday, right? So we'll get slumps leading into Christmas sometimes, and then like I would say like the week of the 20th, 15th to the 20th, we start to get like runs in markets, right? So we do see that sometimes, but it's certainly not like super predictable either. Either one of those things could happen. We don't know what's gonna freaking happen. Yeah, y'all can call me dummy for the rest of the day. I'll have to respond to it. That's okay. I accept it. Honestly, the coffee has to be a little racy. My heart a little racy, is what I mean. We do the Wizards of Stonks. Yeah. Next time, bro. Next time. All right, guys. So we do see a pullback in the SPY right now. We do see a pullback. So we got a little dip in the SPY. Again, we got the FOMC Minutes report. It's not a huge report.
Voice message system.
Yeah, I got this poll live. MicroStrategy pricing in the Fed meeting. So we don't have a Fed meeting today. We have the Fed Minutes report. So it's a little bit different than the actual Fed meeting. It's just it's a file that we're going to break down using AI. Yeah, give me a follow at Beginner Trades. I appreciate it. 50-50 split on this poll. Like, look at this poll, bro. We literally... How does that even happen? 7 minutes ago, we did a poll. And 20 bull votes, 20 bear votes. How does this even happen? Exactly 50-50 split? The odds of this, they've got to be so low. So low. Strange. GameStop is running up. Alright, so we're back up with the SPY. Very choppy range, though. I'm wondering how choppy we're going to be. I've already got a cushion on the day here. So I'm already up, like, some on the day. I wonder if I can attack chop. Like, how choppy is the NASDAQ going to be today? Is what I want to know. So we're gonna take 2 contracts. I'm gonna add some and just kind of risk. We have a cushion that we can play with already on the day. So I'm gonna add to this unless we get enough to take some profit, which I guess we can now. We'll take half of that off. There we go. Get out the rest. A little $20 bill ahead of it. We'll probably buy if we get down here again too. Very predictable. Gold be bear? I don't know. Gold. Where is gold at right now? Gold's been down for a while now, hasn't it? Where's my water? Here it is. Yeah, so gold. 10-minute chart. Gold ran up, you know, leading into the 25th. It only recently started pulling back a few days ago. But if we look at a longer term chart, gold, it's had a good couple year period, but it's recently started to dip down some. So it's been falling down since October, really. It had a little resurgence, though, a couple days ago. Now it's falling back down pretty big today. You can see the dip. Yeah, we're going to break it all down. So we're going to break it all down. There's no FOMC meeting, but we're going to cover the report live here like we always do in 20 minutes. We got the gold chart in the middle. We got the NASDAQ chart on the right. We've got the SPY on the left. Bitcoin will be bigger than gold. Maybe. It might be. We'll have to wait and see. It could be. SPY back. SPY's trying to break and hold over 600s. We'll see if it can. It's possible. We got about 600 here live. I really would love to break 150K today, and I think we could. Right, we're very close. We need like 170 likes. We'll see if we can hit it later. But I think we could break 150K today. If y'all hit that subscribe button, we appreciate it. Bitcoin would be bigger than gold. Yes, put a Bitcoin up. We bought a little bit more Bitcoin stuff earlier. But it went up a lot this morning at the opening bell, and then it just started to dump down. So we'll have to give it some time. 62% are bullish on this report, though. I think Bitcoin, there's a chance that it runs. A lot of the time, Bitcoin runs when everything else is quiet, like middle of the night, weekends. I think the logic is that when other markets are closed, you got more people focused, like more consolidation and interest on Bitcoin. And so I think leading into this holiday week, you know, the stock market's going to be closed Thursday, and Friday is a half day, I believe. And so I think there's a chance that Bitcoin runs. It's definitely not 100% though, you know, like anything could happen, but I think there's a chance. What do you guys think? You guys think Bitcoin will run over the holiday? I think Nvidia is beginning a short-term pullback. Maybe. I mean, I think it's got to hit 100K. No, nothing has to happen. Like, has to or got to is probably not the best word. I think there's a good chance it does. I think traders are watching for 100K, and so they're going to be interested in it, and they're going to be wanting to buy it up, and then that might pull it higher and higher and higher. And then, so I think there's a good chance it happens. The question is when. I think it'll be this year. I think there's a chance it'll be this week. We might have gotten close enough for now, but we didn't actually hit 100K, and I think people want that. It's a moment. It's a milestone. It did hit 100K exactly in the futures market. If you look at BTC futures slash MBT, you can kind of see it did hit, like, it did hit it, but it didn't hit it per coin. I'm waiting for the minutes to reveal the economy is actually bad, and we see a rug pull going into close. That's not going to happen. I mean, it could happen. It's just not super probable to happen. Not very likely to happen, I'll say. Look how choppy the NASDAQ is. NASDAQ's super choppy. I might short this now. We're leading into like a big FOMC report, and I just think we're going to be choppy. But I also think like the SPY is around... I think the SPY is around 600, you know. All right, we're in 4 contracts. How did we get a negative fill on that? We were so... I guess we turned pretty quickly against this just now. I took a piece. Alright guys, we got 15 minutes or so, give or take. How did I get a negative fill on that? It popped up so quickly. Oh, that's unfortunate. I'm gonna keep shorting this. We got a small edge here in terms of like leading into the report. We typically get very choppy neutral activity, so I think for a window there's a higher probability of sideways chop. There we go. Alright, we made a little bit there. I'll take it. My accuracy today's been pretty solid. We're not up a huge amount, but my accuracy's been decent enough to be happy with, I think. I mean, we're not that great today, actually. We only have 60%, 61% accuracy, 1.4. 1.4 profit factor, so it could be higher. We were correct about this move, though. Look at that move. Rejected right there. Super choppy. There's the NASDAQ here on the right. Is that about 21K? And remember, so the last Fed meeting, this is what we did, right? We cut 25. Current federal funds rates right around 575 to 500, 475 to 500, I mean. And if we look at the CME watch tool here, or no, we're at 450 to 475. Sorry. So we're at 4.5 to 4.75%. At 25 basis points. There's zero commission on Top Step X, Jason. So there's no commission. So what you see me trading on is Top Step X. If you want to check it out, we'll do another plug later. But Top Step gives you a demo. They test your skill with it. They're the most legit funded program in the world. There's a lot of other ones, but Top Step's the most legit in the world. They've paid out over 100 million. I think it's closer to 125 million since 2020. Some of the best rules in the game, best rules in funding, zero commission on Top Step X. If I trade micros like I'm doing, it's 74 cents per contract. So I could take one contract, scalp like I do, make $20 a trade, still net most of that in profit. And I just think it makes sense. Base one's 49 bucks a month. If you want to check it out, they're an affiliate of mine, so I'm definitely biased because I get paid by them. Understand all this stuff. CFTC 4.41. Hypothetical or simulated performance have limitations. Definitely biased in their favor. Confirm it all with them. Not an investment professional. Not even claiming to be a good trader. You can check out the link in the description, though, and we put it in the chat as well if you want to check them out. Great way to learn how to day trade in the futures market. You can get funded if you pass their testing. No PDT rule. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Patterns are super similar to blue chip stock patterns like NVIDIA, and there's no PDT rule. Is it 74 cents? Yeah. All right, chat. We're sitting here waiting for this report. We'll see what it shows. NASDAQ's so choppy right now. So neutral. Big Papa Powell. Hey, he's coming. He's coming. Bitcoin bouncing up though. Bitcoin almost back up to 93K. Papa Powell's not speaking today, actually, just to clarify. Powell's coming. I don't know when, but Powell's not speaking today. Today is just the minutes report. It's a reaction to the last Fed meeting, is what this is. All right, guys. Again, we're gonna break everything down live. Yeah, we're gonna break everything down live, as we always do. Part of me wonder if I should short the SPY. It's right at $600, but I definitely don't want to hold it through this report. You know, we're doing pretty good today, though. We're up a little bit. I mean, we're up after commissions. We're up on like about $100, which is good. Small. Only running 53%, 54%. This meeting won't do much. Why is everybody excited? Why does the market react to a meeting that already happened? Because it's a 12-page document, and the market does react to it sometimes. It just gives detailed, like, it gives reasons. It gives an update on the economy. You know, like this report happened 3 weeks ago. It gives an update on the economy, like what happened, why the Fed did what they did, what they're doing, like all that stuff. So yeah, just to give you guys a breakdown, right? Every 6 weeks, the Fed makes their decision. FOMC meeting. We cover it live. We have thousands there. Weeks after that, 3 weeks later, they drop the minutes report, which breaks down why they did what they did, an update on the economy, what they might potentially do in the next meeting. And so what this means is that this report might influence the probabilities on rate decisions, right? Right now, it's about 60-40 that we're going to do a 25 basis point cut in December. 40% chance that we're going to do a pause. This report might influence that decision and in turn affect markets, affect gold, affect Bitcoin. It doesn't necessarily have to. It's just a detailed report on why the Fed did what they did in the last meeting. That's what today is. Yeah, if you haven't subscribed, hit the subscribe button. We are like 150 subs away from 150K. So do it now. Try it one time, might feel good. Subscribe. Hit the notification bell. Am I in sub only mode? I think I should be. No, I'm not. Hey. There you go. Subscribe. Chad, hit the notification bell. We appreciate it. We got about 1,000 here. We'll see what we get. We still got 8 minutes left. My timer's a little bit early. Yeah, and again, like I see a lot of people cover this stuff that don't really understand economics, right? Like I see a lot of people kind of jumping on the bandwagon of like the Fed minutes report. Like some of them are calling everything a rate hike. Some crypto traders that don't really understand what the Fed minutes report is, they're trying to cover it. If you want somebody that actually knows what this all means, subscribe, you know, because it's super nuanced, super difficult to understand. But, you know, when the economy's weak, the Federal Reserve typically wants to save it by doing economic stimulus. It's called a dovish Fed. They want to lower interest rates. They want to print money. They want to ultimately cause unemployment to go down and job market to heat up. They want, you know, people to start spending more to save us from depressions, recessions. That's not always a good thing. A never-ending bull economy is not always good. So if it gets too hot, they will see inflation spike like 2021, 2022. After the pandemic, inflation spiked. CPI got up to almost 10%. PCE got pretty high as well. And so then the Fed has to play catch up. They have to push the economy down. That's why it's called a hawkish Fed, because hawks dive, right? They want the economy to go down a little bit. And so they will raise interest rates by rate hikes. And that's what they did for a long time. And then they paused interest rates at these high levels. Short-term interest rates, which eventually trickle into everything else, long-term rates. And so, yeah, today we are looking at what they did in the last Fed meeting, which was a 25 basis point cut. So they cut it 0.25%. They cut interest rates 0.25%. So, yeah. Yeah, we buy bonds all the time. I like buying T-bill personally, but bonds are ultimately what drives this whole thing anyway. Hawks attack. You got to think about it like this. Like a hawkish Fed is a Fed that wants interest rates high. They want to push back the economy. They want people to stop spending so much, right? And it's not always easy or directly influenced, but they want people to stop spending. If people stop spending, inflation goes down, because if you're selling bubble gum and you're sold out, you got 100 pieces of bubble gum out every day and you sold out of it by the end of the day, what are you gonna do? You might bump prices up. You might make a little bit more. You might bump prices from 25 cents to 50 cents a piece, you know. And that is the problem with too much spending, is that it causes inflation. And that's really why most people are unhappy right now. Doves fly high and hawks swoop down, 100%. My dad's a falconer, believe it or not. So look, I show this picture sometimes. Speaking of hawks, I should use this more. There's some type of joke I could have with this, you know. Okay. There's some type of joke I could have. All right, guys. 4 minutes. 4 minutes. I have to go find it. I don't know where it's at. It's somewhere over here. Some of these pictures are funny. I can't find the hog picture. It's somewhere. Oh, there it is. Look at it. Look at young John with the hockey shirt. You know. And yes, I know I look like my dad. This is actually a Harris hawk. I don't know why I called it a red-tailed hawk. This is actually a Harris hawk. Anyways. All right, guys. We got 3 minutes left. 3 minutes. Hawk 2. Yeah, hey. Does the market go up or down? Let me know, bull or bear, in the chat right now. What do you guys think? There's no actual meeting. This is just a report on a... There's no actual meeting. This is just a reaction to the last meeting. We got about 3 minutes left. How do you feel about Nvidia's future? I think Nvidia is going to be fine long term. I think it might pull back a little bit, but I think as a company, it's going to be successful. Whether shareholders are going to be happy if they buy in now for the next couple of years is a different story. I think it might have some extension, but I think in general, it's going to go up over time. Short term, it's just a little high, but I still like it as a company. All right, guys. This timer is a little bit early. We got a minute and a half left, technically. Powell's not going to actually be here. This is just a reaction to the last meeting. Powell's about to spit on that thing. This report might. I don't know if Powell's going to. All right, guys. All right, so this report will show up. You see how it says minutes right here? This is the last meeting. Here's the minutes report. Going to show up on the right side. We got about a minute left. There's not going to be any rate decision today, though, guys. Remember, there's no rate decision today. This is a reaction to the last meeting. This is going to be a 12-page document. We're gonna break down using AI to show you guys what's in the report. We're gonna give you cliff notes. We're gonna break it down using AI. Again, this timer's a little bit early. We still got 30 seconds. All right, guys, here we go. 20 seconds. All right, you guys ready? All right. And here's the report. Should be live right now. Let's see how the market reacts to it here. Here's the SPY on the left side. All right, so far we're getting a negative reaction and then a quick retracement back up. Let's see if this the SPY can break highs right now. All right, guys. Waiting for the report. Not out yet. All right, guys, so we got the report. We're going to start breaking it down. The market hasn't really reacted. Market hasn't really responded much here, so we're not really getting much action here. So the market hasn't really responded to this yet. Some say the Fed could pause easing and hold rates at restrictive levels if inflation remains elevated. So a lot of people, some of the participants are talking about potentially, I'm going to put a lot of this up in chat, but I'm going to put the text disclaimer right here. We'll summarize it. We'll put this over a little bit to the left. Yeah, we're going to have to lower this here. So here's one of the cliff notes so far. And we're going to break down the report as we get it. All right, so here's the document. So I'm gonna start summarizing this report. All right, it's a long report. Again, it's a 12-page document. And so we're gonna summarize each section in about 75 words. And we're also looking at the market's response, which so far has been mostly bullish, but very underwhelming reaction here. All right, so we're gonna start breaking this down. Okay, let me show you guys. Remember, Powell's not actually speaking. We're going to start breaking it down. All right, so in developments in financial markets and open market operations, Treasury yields rose significantly. It was driven by robust data and monetary policy signaling slower rate cuts. Equity markets gained, reflecting optimism about economic resilience, while volatility in the VIX declined after the election. The federal funds rate expectations shifted upward with broad uncertainty about long-term levels. The balance sheet runoff, which is quantitative tightening, was projected to extend until mid-2025. So they're going to continue to do QT until mid-2025, most likely aligning with rate cuts. Stable money markets saw minor repo facility use and declining ONRRP facility usage reflected higher Treasury bill yields. And again, the Treasury bill yields went up mostly on a less dovish Fed, right? When they think the Fed's going to be dovish, yields go down. But when they think the Fed's going to be more hawkish, i.e. less cuts, more pauses, yields rise, right? Because the underlying bond prices go down and the yields rise, if that makes sense. Looking at the staff review of the economic situation, economic growth remained solid, supported by moderate job gains and a low unemployment rate. Inflation eased, core PCE 2.7% in September. The labor market showed resilience, signs of gradual cooling. Consumer spending was strong, driven by labor market strength and rising incomes, though low-income households face financial pressures. Internationally, GDP growth picked up slightly, but manufacturing weaknesses persisted. Inflation in foreign economies mostly went down, though, aside from certain parts of Latin America. In the staff review of the financial situation in this report, the expected Fed funds rate path rose amid strong economic data and cautious monetary policy. Basically, the economy was stronger than they originally expected, and what this means is that they might be less aggressive in their rate cuts, because you only cut rates if the economy's weak enough to justify it. And so if the economy is showing resilience, i.e. stronger data, then they're going to be less likely to cut rates, and that's another reason why the yields went up. Treasury yields increased due to higher term premiums, and this is exactly what I just said before I read it. Equity markets rallied on economic optimism. Credit spreads narrowed. Short-term funding markets were stable despite quarter-end pressures. Internationally, rising U.S. yields influenced foreign rates. Geopolitical developments also drove mixed equity performance. Borrowing costs rose for households and businesses, and tight credit for smaller firms and mixed consumer credit trends. In terms of staff economic outlook, so this is economic outlook by the staff, right? So this is where we're looking into potential future projections. And you can see the FOMC Minutes report did drive this higher. It did drive the SPY higher. The SPY just drove $600. But yeah, so 2024 GDP forecasts improved, reflecting strong labor market and spending data. Growth beyond 2025 was projected slightly below the potential, with unemployment edging up. Inflation expectations for 2024 increased slightly, but were forecasted to decline towards the 2% target by 2026. Uncertainty around economic forecasts decreased, though risks remained. Inflation risks were balanced, and labor market strength expected to persist under appropriate monetary adjustments. So basically, growth beyond 2025 was going to be slightly lower than expected. Unemployment edging up. So they think it's going to be a little bit weaker than originally expected. Inflation expectations for 2024 slightly increased, but were forecast to decline towards the 2% target by 2026. So they think inflation might be a little bit worse next year, but by 2026 they think it's going to go down a little bit more than expected, or a little bit more than it, to compensate for it, I guess. Now, when we look at current conditions and economic outlook, participants noted easing inflation and solid economic activity. Labor market conditions showed signs of softening but remained strong. Consumer spending was robust, supported by rising wages and wealth. Though low-income households faced financial strain, business productivity gains were debated for their durability, and risk to inflation remained balanced. Geopolitical and financial disruptions identified as potential economic risks. And participants emphasized the importance of gradual policy adjustment to maintain progress on inflation and economic stability. Basically, they stress the need for balanced rate decisions, not just dumping rates down to kind of stimulate an economy that doesn't really need it. And so what this might mean is that we might maintain at the interest rates we currently are. Looking into the future, we might remain here a little bit longer than expected, right? Now, long-term rates like mortgages are less influenced by short-term decisions, and these are mostly, when we're talking about these rates, we're talking about short-term rates like home equity lines of credit or adjustable rate mortgages. They're going to be directly influenced by short-term rates, but long-term rates are influenced in an indirect way from this stuff as well. So that's where you can kind of expect all that stuff, and that might be, the market's coming down a little bit now on this report as well. So the committee lowered the federal funds to 4.5 to 4.75, 25 basis points. Members pledged to continue reducing Treasury and mortgage-backed security holdings while monitoring economic data for future adjustments. Basically, they're going to continue to do quantitative tightening, which means they're unloading their balance sheet, trying to, take liquidity away from those markets. And yeah, so markets corrected a little bit. I'm not going to tell you guys to buy or sell. I have no freaking idea whether you should. I'm breaking down this report as the title suggests, which is reacting to the last Fed meeting. So yeah, that's basically this report. Some interesting things, like I said, I think most of this shows ultimately like a more hawkish Fed than we thought maybe like a month or two ago, right? A month or two ago, we thought the Fed was going to be super dovish, cutting interest rates, bringing interest rates down. What we're seeing now is that the Fed recognizes that the economic data that we're getting is not as weak as they originally expected it to be. And in turn, they're going to be a lot more cautious and balanced in their rate cuts, right? So they're still probably going to be cutting rates next month in December, but it's not going to be a 50 basis point cut unless we get bad economic data to justify it, right? So tomorrow we have PCE data coming out. We have GDP data. GDP is expected at 2.8%. If you want to subscribe, we're going to cover it live at 8:30. PCE data at 10. Everything we do here is completely free. We don't charge for anything here. Everything's free. We cover every major economic event in markets. And listen, guys, we only need about 100 subscribers to break 150,000, which is a cool milestone level for the channel. We need again, about 100 subs. Do it now. Subscribe. I appreciate the love. Thanks so much. Gold. Let's take a look at gold. So we got NASDAQ, the SPY up. Bitcoin's coming down. Let's see what gold's doing. Gold might, since inflation is a risk, gold might be going up from this report, but who knows? Yeah, gold actually is moving up. And so you can kind of see how that works, right? If it's more optimistic for the economy, gold might, gold sometimes moves with macro markets, but if they think inflation's going to get worse, what do people hedge with? They hedge with gold, right? And basically this report said we might see worse inflationary data in 2025, but they think it's going to ease by 2026. And so, yeah, that's what the report kind of showed us here. If notes are based on the last meeting, why would it affect price in any way? Because we get more information than they gave us in the last meeting, right? The last meeting, they tell us their rate decisions. They tell us what they did. They give us a brief overview of like economic updates and stuff like that. But in this report, again, if you listen to me break it down, we have, it looks at outlook this year and next year, right? So essentially it looks at what they might do at the next Fed meeting with in mind that economic data stays good. And so it kind of breaks all that down. So again, I'm going to read this one again. The 2024 GDP forecast improved, right? So they think GDP is going to continue to go up, reflecting strong labor and spending. Growth beyond 2025 was expected to be below the potential number they originally had, with unemployment going up potentially in 2025 or after 2025. Inflation expectations for 2024. Essentially what they're saying is after next year, they think the economy is going to be stronger, but in turn, we're going to have inflation problems as well, right? So this is stuff to look at into next year. It's why gold people might be buying hedging with gold because of inflation risks, so they do give you a little bit more info here than the Fed meeting. So I hope all that makes sense. And again, so let's look at to see if the rate decisions changed a little bit. So far the market's actually dropped. Gold is up, but the market's actually dropped. We'll see if this has any big, deep effects. So rates are still the same. Rate decision potential is still the same, 60-40. But we'll see if this changes at all. Again, participants noted easing inflation and solid economic activity with labor market conditions showing signs of softening but remaining strong, consumer spending robust, rising wages and health. So basically, they see a stronger economy than originally projected earlier this year, is what this shows. And again, if you haven't already, check out one of our sponsors. Check out Top Step. If you want to day trade, the futures market is probably where you should do it. It's where most pro day traders day trade because there's no PDT restrictions and less red tape. These funded account programs are allowed, and Top Step's the most legit one in the world. They give you a demo. They test your skill with a demo account first. It teaches you how to trade. It teaches you how to trade under pressure. And if you fail, you only lose the monthly subscription, as opposed to most day traders who lose thousands of dollars for their first account. I lost my first account. Almost all day traders do. And so it makes no sense to fund your own account. Try this first. It's a perfect middle ground of pressure. You're risking 50 bucks a month, not thousands like most day traders end up doing. But if you pass this test, the base one, you got to make 3K in profit without losing 2K first. 2 to 3 reasonable ratio. If you could do that, they fund you 50K with a 90% split, and they've paid out around $125 million since 2020 to their traders. They're the most legit one in the world. They've been around for 12 years. If you use Top Step X, we've been day trading on there most of the day today. 0 commissions and only a tiny amount of fees per trade. There's only 74 cents in fees per micro contract. So I can take $4, $6, $3 and still net profit on these trades and take these small scalps and actually make money doing it. And in the futures market, I can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Patterns are super similar to blue chip stock patterns if you trade indices, and it just makes sense. If you want to check it out, they are an affiliate of mine. I'm definitely biased because I get paid by them, you know, so they pay me money. I'm biased, but it's genuinely good for traders, and most day traders lose their first few accounts. And if you were going to buy a demo account outside of them with real-time data, it's going to cost 30, 40, 50 bucks anyway. And so this makes more sense to me. Teaches you how to trade better too. But if you want to check it out, here's the link. Great way to help support the channel. There's the link in chat. You can also find the link in the description if you're interested. You can also trade Bitcoin on there. You can trade micro Bitcoin, that is. And I was playing with that earlier. We made some money on micro Bitcoin today. So, all right, guys. I'm pretty sure you can use a bunch of them. Best is subjective. Top Step's the most legit for me. I think you can copy trade. I think they have a copy trader built in. I'm pretty sure they do, but I'm not 100% sure. I'm not a big copy trader. I like to kind of manually manage my account one by one, but everybody's different. I'm going to short this now too, so we're going to jump in short. You can see how similar it is to day trading stocks. I'm probably going to add if we continue to move up. 2 contracts here. We get a little bit of pressure downward. The NASDAQ's been so choppy and sideways today. So we bounced right at that 200 exponential. Let's see if we can break down a little bit more. There we go. Took half off there, locked it in. And we'll get out the rest there. So it made a little $20 bill there. I'll take it. Very quick. Well, yields rise. Yields will rise. So this report might make yields rise, right? So the reason it might is because it was more hawkish than expected, and a hawkish Fed means higher yields. So if you look at, like, it depends on which yields you like to look at. Yields are up a little bit from this report. So here's a 10-year yield. You can look at shorter or longer term if you want, but yields are up to about 4.3% for them. Not a huge amount. So we should also see the price of underlying bonds. If the rest of the market interprets this as more hawkish like I do, we should see the price of, like, underlying bonds go down and yields go up. Short Palantir? I'm not shorting that. You're crazy, brother. Can you summarize what this means for markets? It means a hawkish Fed, a more hawkish Fed than expected, I would say, right? And so what that means is that the Fed might try to maintain higher interest rates leading into next year than expected. Right now, they're expecting to cut 0.25% in December. That stayed the same, but I think this report was more hawkish than expected, and I think that's what it means—a more hawkish report than expected. So basically a more restrictive monetary policy Fed that's trying to combat inflation. But it's all going to be, inflation data drops tomorrow at 10 a.m. So again, if you haven't subscribed, hit the notification bell. We appreciate it. We're going to be live tomorrow at 8:30 Eastern Standard Time. We need 9 subscribers left to break 150K. 9 subscribers. So hit the subscribe button, hit the notification bell. I appreciate it. We should hit that easily right now with this last little plug. I appreciate it, guys. Hey, I'm going to go ahead and say thank you right now. Thank you guys so much. We hit 150,000 subscribers. That's a crazy number. That's a crazy number, you know, so I appreciate the love. And again, guys, listen, we cover all the economic data. Tomorrow we have GDP data. It's expected at 2.8%. We've got PCE inflation data. Core PCE is the one you want to watch. It's expected, I believe, 0.3% for core PCE. Both of those drop tomorrow. Generally, they're separated daily, but since we have a holiday on Thanksgiving, they're both dropping tomorrow. So subscribe, hit the notification bell, and yeah, thank you so much. We're at almost 50.1K. Hey, thank you so much, guys. I appreciate the love. Thanks so much. We'll see if we can day trade a little bit more right now. We're kind of hanging out. The market's breaking down here on this report. So no, thank you, John. Hey, thanks, Biggie. I appreciate you, brother. Hey, thanks so much. It's cool feeling, man. I originally started this channel as a hobby, right? And you know, if you get in early, it's easy to grow, right? I got in before anybody was really live streaming financial stuff, to be honest, like trading especially. And so that's how we grew the channel. Lesson in business, get in early, you know. It's better late than never, but if you're late, you got to do something more to stick out. Yeah, Top Step's the most legit for sure. Easily the most legit. We're gonna see about day trading. We broke under a big support level. We get a bounce. I don't know. Part of me might buy this up. It's hard to tell though. Like, I want to bet on choppiness, but yes, I'm gonna wait. I'm gonna buy this now. I'm gonna add more to this. See if we get a bounce back up. Unless we're getting a delayed reaction here. Actually, you know what? I'm gonna cut this. Let me make sure. Let me check geopolitical stuff going on right now. I know somebody's saying that some other stuff is going on. So we got one contract, tiny position here, but I'm not gonna add any more. Didn't somebody say that there was some type of presidential speech today? Yeah, let me sell this. That's a big drop. And I'm wondering if that's what's going on right now. Let me see. Yeah, let me look at the SPY gold. Gold's dumping down. A lot of bullish, bearish action. So we're still dipping pretty fast here. Look at this drop. Wow. See if we pop up here. We got the holiday music going. Hit that subscribe button, guys. I appreciate the love. Thanks so much. Market's still falling down some. Look at this huge drop going on in markets, man. I wonder what's going on. So big drops in markets. Let's see if we get anything better action. A little bit of a rebound back up. See if we continue or if the market keeps breaking down. Gold bouncing up a little bit. NASDAQ dumping fast here. Wow. All right, so we cracked this low. Let's see if it's a liquidity grab or whether we keep breaking down. What do you guys think? Everything dipping? A lot of bear action. Looks like the SPY's trying to bounce back. The FOMC meeting's not today. This is a reaction to the last Fed meeting, guys. A reaction to the last Fed meeting is what this is. Yeah, so we tapped up these markets. And now we started to bounce back. A lot of bear action there, a lot of red. Economy is strong. Yeah, everyone is struggling. Makes perfect sense. Well, I mean, you got to think about it like this, man. This is something we talk about a lot so people can understand it. A lot of people think, hey, everybody's struggling. The economy must be bad, right? The real reason people are struggling specifically is because of inflation problems, right? Inflation has made a lot of people struggle. That's what's really going on. Inflation has caused problems in markets, like a lot of problems. So I hope like that makes sense. Inflation has caused a lot of issues everywhere, right? And that is why people are genuinely unhappy, is because of inflation problems so much, man. Inflation has caused so much issues in the country that people are just genuinely unhappy from that inflation. That's what they're really unhappy about. They're not unhappy about the economy being weak and having a hard time finding jobs. Most of them are unhappy because prices are freaking 3 to 4x what they were. Right? Like that's the real issue. Inflation has gone up so much that people are just genuinely unhappy. So we got into a couple trades, but back and forth here, to be honest. We'll see if we can catch some more. We're day trading on Top Step. Again, if you want to day trade with me, there's no PDT rule in futures. It's probably, look, I came from stocks, right? I really did. I came from stocks. I know how stocks go, right? Most people start at stocks and they stay there, right? There's so much red tape in stock. If I want to day trade stocks actively with no PDT restrictions, I need $25,000. What new trader has any type of risk management? None of them do, from my experience. Zero traders have good risk management. And so what ends up happening is like they just end up losing a much larger account than they should have. All right, so we're going to play with our risk and kind of risk what we've made today. See if we can get a nice bounce continuation back up. 6 contracts now. And so what futures allow you to do is trade small. Like I can day trade the futures market, no PDT restrictions. I can take these small little scalps, and if I lose, like it's not the end of the world. Versus me trying to day trade stocks like this where I need freaking 25K. And this is Top Step. Again, they give you a demo. They test your skill with a demo. You pass the test, they fund you. You fail, you only lose what you pay for it. Oof. Big dip. I think I got to cut this now. That's way too big of a drop. So we just kind of gave back our profit. We're, you know, could have been worse. But if I would have traded my own account, I would have lost more. But again, they're an affiliate of mine. I'm biased. We'll keep trying to trade this. I think there's probably going to be a rebound eventually. So, understand CFTC 4.41 though. Hypothetical or simulated performance. Oh yeah, check out our Discord. We got a free Discord as well. Doesn't cost a thing. Market's kind of starting to turn though. So market is starting to turn a little bit. Let's see if it does. So is this the presidential conference that's going on, I guess is the question. Don't see any opportunity. And the market's definitely not crashing. This definitely doesn't look good though. Who? It's what? Oh. Maybe. I don't know. My number rule of thumb is that nothing's freaking definitive. Like, I could come up all these wizard trades and tell you guys I'm the greatest and I know all this stuff and that the market's gonna do A, B, and C, but nobody freaking knows. And I respect somebody much more if they're just like, hey, I have no idea, you know? Like, you could have probabilities and bet on favorable, good, bad probabilities, and that's all good and cool, you know? But, you gotta be honest about it. That's my thing. Like, you gotta be real about it. You gotta tell people the truth. If you don't know, just admit you don't know. Because one of my favorite things is to say I don't know, you know. Somebody say, hey John, what's the market gonna do? I have no freaking idea what the market's gonna do, brother. And I'll put it this way, typically the traders that think they do know are the newest, rookie-ish traders in the books. They haven't been long enough to be humbled. They haven't been around long enough to be humbled. Now, long-term you do know, right? So long-term you can bet with pretty favorable probabilities. In day trading, you can use probabilities and that's fine. Most day traders lose. That's why you should be using Top Step versus funding your own account. It's a lot cheaper to lose on Top Step than it is to put up thousands yourself, to be honest. It just gives traders a cheaper option. No, we're not going to stream that one, Julia. Yeah, I'm just not a politics guy. If I was going to stream something, I would have streamed the debates, but I'm just not a political guy. I like ICT stuff, to be honest. I do. I like ICT stuff. I think ICT stuff works. So I'm definitely not like hating on ITC stuff at all. Or like really smart money concepts is what I'm actually talking about. ICT, I think, just packaged it. But like, I like smart money concepts. Smart money concepts are good. They work. They can work. Right? Everything is with a degree of probabilities. Nothing's 100%. Market is bouncier. 24 months. Yeah. SMC is smart money concepts. They can be powerful. You just gotta learn how to use them. They have to do with like liquidity grab, which is basically like false high breaks and stuff like that. Yeah, we're green on the day trading right now, but kind of going back and forth here. We're trying to find an edge. Market is bouncing back though, so we do have some range here bouncing. I'll show you guys my day trades here. I might add to this. So I might add to this. We're gonna try to pick up a position if we kind of dip down to here, if we can. Small and steady. There's no look. I gotta put this up on screen because everybody thinks the FOMC Minutes is a recap / reaction to last FOMC meeting. There is no Fed meeting or decision today. We are recapping last meeting. Put this up on screen. You're welcome. Oh man, this trade's going against me, guys. Y'all didn't even say anything. Man, y'all just left me here to lose. Y'all gotta yell at me if it's going against me. I'm gonna add to this. I think we might bottom out here, but who knows. Alright, we got 4 contracts. See if we get that retracement that we want. Now let's see if we bottom out here like we want. Slightly green. There we go. You love to see it. You love to see it. And this is what I mean. So like a lot of traders are jumping in short right here. They think it looks weak. This is a much better option most of the time. We can hold the rest flat, maybe add to it if we want, figure out what we want to do. We got a really easy risk at the low of the day. We added 2 contracts here. We'll see if we get a full fill of this candle. Sitting tight. Alright, we took another piece off, locked it in. Nice. I thought we would get this. I'm gonna go ahead and cut the rest right there. I thought we would get that. Not too bad. Oh, I still got my disclaimer up, guys. Yell at me. I'm sorry. Here. There we go. People in the chat are gonna be like, John's the worst. So unprofessional. I know. I know. Yeah, thank you, Aaron. Or Eric. Was that Eric? Yeah, that's Eric. What's up, dude? Don't catch the falling knife, indeed. I mean, I don't know, bro. It depends on, like, I think sometimes, I don't think you should short into big moves like this, but I think sometimes, like, we have stuff that looks like this, right? We have a big dip, a bottoming candle, and then a rebound back up, right? Or a couple confirmations and then move back up. And I think if you can try to catch it, it works really well. I think sometimes the most obvious move is the worst move to take. And so I think if we have a super choppy range and we break underneath it here, I think it's more likely that we're going to come back up and continue in that choppy range like this and just kind of keep going like that, right? Especially in a holiday week like right now, the edge is actually much higher that it's going to do that. But as soon as we break this low, everybody and their grandma gets really excited and they start jumping in short, and then when they're wrong about it and it starts to creep up, some of them add to it, still trying to target this big breakdown, you know, and maybe it happens. I don't know. It could happen, but it's just not the big edge strategy I want. The benefits of Top Step X: no commissions, tiny amount of fees per micro contract, and no commissions. And I think that's a big edge if you're trading futures. I think that's a large edge. But yeah, thank you so much, guys. We broke 150,000, which is crazy. That's crazy. Thanks so much. Channel's come a long way, honestly, man. It's been fun to watch the channel grow. It really has. You know, like you kind of see, like, we got almost 30,000 views in the last 2 hours. We got almost 50,000 views. We had like 7,000 people here for NVIDIA. It was fun. So thank you guys so much, man. We broke 150K. I appreciate it. That's fun. You know, cool to see. Cool to see. All right, guys. Are you bullish or bearish right now, chat? You think we're going to go up or down or sideways from this? How are fees different than commissions? So a fee is a flat rate, right? A commission is a percentage of what you're trading. Fees are better in general. I like fees better, unless you just trade really small, really small. Love your live shows. Hey, thank you, Crypto. I appreciate it. When do y'all think Bitcoin is gonna hit 100K? I know futures got up to 100K, but I think we gotta hit 100K sometime soon. Look at that support level hold too. Look at that, right off of that support level here. Look at that move. And again, this will be the last plug I do. Shameless sellout plug here. Check out Top Step. Great way to learn how to day trade. Again, I was one of those traders, I thought I was going to get rich. I thought I was going to be like a savant prodigy. Everybody was going to be like, John, you're so good at trading. How did you do this? And I was going to be like, you know, I just used my brain, guys. I just used my brain. I ended up instead losing thousands of dollars in the first couple weeks. I'm pretty sure y'all can relate to this. Everybody thinks they're going to be some savant, just genius trader, jumping out of bed like, it's on, the move is happening today. You know, real trading's boring. For that reason, try Top Step. Honestly, you'll lose less if you try this first. You're still probably going to lose because most day traders lose. It's a lot cheaper to lose them than it is to fund your own account and lose that. Check it out right here. Again, they're an affiliate or sponsor of mine. I'm biased. Confirm everything with them. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. Yeah, I'm probably about to close the stream is why I'm doing one less plug. Yeah, you'll be alright, Forex trading. Geopolitical events. You can use Market Watch. You can use Benzinga, Umar. You can use... Yeah, I mean, again, I'm going to tell you guys this to be fair. Y'all can get mad if I make money. But I am absolutely doing this to make money. If you think anybody's here out of the kindness of their own heart because they just want to help people succeed, total nonsense, right? Everybody's here to make money. I'm not spending 6 hours a day talking to you guys about stocks out of the kindness of my heart. Nobody is. You shouldn't expect that either. I would rather trust somebody that's honest about it. This is my honesty. I'm 100% here to make money, for sure. But that's okay. You know, I'm providing value. I give you guys reports. We cover everything. You want a one-stop shop where we're going to cover all this stuff? Subscribe, you know. I appreciate it, guys. Y'all be good. Again, tomorrow we got GDP data. We got GDP data. We got PCE inflation data at 10. We got GDP data at 8:30. We got durable good orders at 8:30. We got Chicago PMI at 9:45. Tomorrow is a data-driven day, and it might be volatile. So just be ready, guys. A lot of stuff coming out tomorrow. A huge day in terms of economic stuff. And, yeah, hit the subscribe button. I appreciate the love. Thanks so much. 150,000. You know, I will take that. I will take that, guys. Hey, I love you all. Y'all have a great day. Again, tune in. We'll be here tomorrow morning, bright and early at 8:30 Eastern Standard Time. We're going to stream well before that. We're going to be trading our accounts. And, yeah, we'll see how that goes. Good luck. I'll see you guys tomorrow. So I'll give you guys a quick little rundown. The FOMC Minutes report showed that the Fed is probably going to be a little bit more hawkish than originally expected, right? What does hawkish mean? Hawkish means more restrictive monetary policy. The economy is not looking weak like we need if we want rate cuts. If you want aggressive rate cuts, you need the economy to be weak enough to justify bringing interest rates down. If the economy's rolling, you don't need to cut rates as much. And that's basically what the Fed is saying. They're saying the economy is strong enough to not justify rate cuts. Not to justify super aggressive rate cuts. I think we're still going to cut 25 in December. But what this might mean is worse inflation problems next year and beyond. Stronger economy than expected. Interest rates are going to be stagnating, I think. They're not going to be going down as much as anticipated. So stagnant interest rates, higher inflation potential, and a stronger economy. That's what it means. Hey, I love you all. You'll have a great day. I'll see you guys tomorrow bright and early, 8:30 Eastern Standard Time. Later, chat. It depends on, somebody says, what do you expect for tomorrow? It depends on what the market does. It depends on if we have good or bad data, right? GDP is expected at 2.8%. PCE data is expected at 2.3%. And that's inflation, right? PCE is inflation. Core PCE expected at 2.8%. Core excludes food and energy prices. So what we expect tomorrow is going to be relative to what happens with economic data. And again, we're going to cover it all. I'll see you guys tomorrow. Y'all be good.